Hey everyone, and welcome back to the FishMarketAcademy, where we teach you how to fish for gains. So in today's video, we'll be exploring a protocol that is focused on creating stablecoins for the Asia market. The protocol is called Bluejay Finance, and in this video, we'll explore how it works and how to participate in their whitelist and why I think the risk reward is pretty decent. So let's take a look. So Bluejay Finance bringing decentralized stablecoins into Asia. I actually met them at the Token 249 and they gave me these Bluejay shirts, and they are a bunch of really friendly and cool dudes. So this video is part of the series where I go through various crypto companies in Singapore. So let's get started. So disclaimer, nothing I say is financial advice. So what is Bluejay Finance? It's a capital efficient, decentralized stablecoin protocol that issues stablecoins pegged to various currencies focused in the Asia market in the beginning. So they aim to create a decentralized financial movement starting in Asia with their stablecoin infrastructure. And they have different types of stablecoins like Blue SGD, Singapore dollar, and they will also allow everyone to transact beyond USD pegged stablecoins and cash out easily and lower any FX risk or foreign exchange risk. So Bluejay Finance has several features, and they are taking the best from Olympus DAO, which is also known as OM, and MakerDAO, Angle Protocol, as well as Frax Finance. So when we go through the whitelist, you actually see them. So their features include like bonding mechanism, protocol-owned liquidity, price stabilizer, etc. And we'll go through them right now. So starting with their bonding mechanism, Bluejay will use bonding to acquire protocol-owned liquidity and reserve assets, starting with DAI, which is the MakerDAO stablecoin. And they will bring stablecoins to the peg by selling BLU, which is their governance token, at a discount. And in terms of the bonding mechanism, there are two types of different bonds, the treasury bonds and the stabilizing bonds. So both of them actually give users discounted BLU, but the treasury bonds will give the discounted BLU after 7 days, and the stabilizing bonds will give the discounted BLU after 6 hours. So one is 7 days, the other is 6 hours, and stabilizing bonds is shorter at 6 hours because it's more urgent. You want to make sure that the price is stabilized in as short of a period as possible, so that's why it's 6 hours. And treasury bonds is more for longer term investors, and I think 7 days is a appropriate amount. So the bond will vest linearly over the vesting period, allowing the user to claim vested BLU as it matures and eventually the full amount that they are owed. So protocol-owned liquidity via treasury bonds is basically a way for them to raise assets for the treasury directly, allowing the protocol to acquire its own liquidity for minting and backing stablecoins. So this will actually allow for a more predictable supply of liquidity for stablecoin users, and bonds are priced based on reserve assets or LP tokens. And the treasury bond assets will be transferred to the treasury directly to be used as operating capital for the stablecoins. So this is actually very similar to the OM model, where it's actually a fundraising mechanism. So let's look at the diagram that will better explain this. So as a user, I can actually LP, SGD and DAI, or BLU and DAI, and then I can send it into the treasury bond and they'll give me discounted BLU bond. So this SGD and DAI will actually go into their treasury and then they'll give the BLU out. So their BLU tokens are essentially backed by basically SGD and DAI. For this example. So although we are getting a governance token, it's actually basically backed by strong currencies. So the BLU token has intrinsic value backed by the treasury. And then next up, we have the protocol-owned liquidity via stabilizing bonds. So stabilizing bonds are a little bit different from treasury bonds in the sense that they are here to peg the various stablecoins to their prices instead of acting as fundraising for the treasury. So there will be two different types of bonds offered during different market conditions, whether they are in expansion or in contraction. So Bluejay can mint and sell stablecoins or buy back stablecoins from the market using the reserve assets acquired from these stabilizing bonds. So expansionary bonds are offered when the price of the stablecoin in the liquidity pool is higher than the Oracle. So if like Blue SGD is actually worth more than 1 SGD in real life based on the Oracle price, then they will actually issue the expansionary bonds, which will basically be used to mint stablecoin. So there will be more Blue SGD and then they will be sold. So this will actually increase the supply and lower the price of the stablecoin. And then on the other side, we have contractionary bonds, which are offered when the price of the stablecoin in the LP is lower than the Oracle price. So this is when Blue SGD is lower than 1 SGD, for example. But this can be for any currency. I'm just using SGD as a starting example. So the bond sale assets will be swapped for stablecoins and burnt to lower the price of the stablecoin. So speaking of the treasury, it will be DAO controlled, and they plan to be fully decentralized, where all the assets raised for the treasury will be controlled by BLU stakers. So no member of the team has direct access to the DAO treasury, and they cannot use the funds without taking a vote among the DAO members. So this means that when you're actually giving like DAI SGD to the treasury for blue tokens, you are actually having rights over the blue SGD that you just gave into the treasury in a sense. So parameters like the collateralization ratio and the allocation of the treasury into the different stablecoins will be controlled by the DAO through voting. So if we compare this with a very famous protocol like Olympus DAO, they are similar in the sense that they have the same bonding mechanism, the same protocol-owned liquidity, and the same DAO Controlled Treasury. But the differences is that Bluejay has a simplified smart contract for bonding, and the treasury is deployed for stablecoin issuing, and they also have per second compounding versus the per epoch on Olympus. And they also offer stabilizing bonds for pegging stablecoin prices. And what I think is the most important is that their revenue is generated from protocol growth and utility of their blue SGD or blue stablecoins. So this is what I think will be one of the main important aspects on whether this protocol succeeds, is how much utility they can bring to their blue stablecoins. So they also have a multi-stablecoin model where they use their protocol-owned liquidity to create multiple currency stablecoins. So this means that every stablecoin issued is backed by liquidity from the treasury, and they have this interesting mechanism where they cannot actually issue out more stablecoins than their assets in the treasury. So you will not run into a situation where the amount of stablecoins are more than the amount of assets they have in their treasury. So this way, the protocol is actually more capital efficient compared to models that use over-collateralization only, because the over-collateralization is more capital inefficient as you have to deposit more than you are minting. And this will allow Bluejay protocol to actually scale more effectively and efficiently when the demand of their stablecoins increases. So looking at a multi-stablecoin model, Angle Protocol comes into mind because they also have multiple stablecoins focused on the European markets. So the similarities is that they are both multi-stablecoin model, and they are both capital efficient model that avoids excessive over-collateralization. But the differences is that Bluejay has protocol-owned liquidity, and the exchange risk is absorbed versus selling to hedging agents on Angle Protocol. So Bluejay has a bit more risk in the sense that they are absorbing the exchange risk, but I think it is not a very big risk, and it's actually a better approach compared to Angle Protocol. Because if they absorb this risk, they are actually keeping more of the revenue as well. So next up, we have Price Stabilizer, and this basically allows the DAO to manually bring the stablecoin prices to their pegs as a last resort. So if something goes wrong and then like the Oracle prices or something is not working properly, they can actually use this Price Stabilizer mechanism where the DAO keeper will reprice based on the stabilizer by getting the price on the Oracle, and then they will swap it, and they'll just manually adjust the supply so that it will bring the stablecoin back to peg. And because, like I mentioned previously, the treasury will always have enough money to back all of their blue stablecoins, they can actually do this manually at any point in time. And a bank run-like scenario will not happen because they are fully backed. So right now, blue stables will be over-collateralized at launch because they do have some funding, and the protocol will continue with this model until they reach a certain scale and stability. But in the future, when they are more or less stable, they will explore a fractional reserve model for better capital efficiency, similar to the Frax model. So as we know for Frax, they can actually mint like 5% using Frax share, and then 95% using USDC, and that allows you to mint out the Frax stablecoin. So in Bluejay's case, you can mint, for example, 95% DAI and then 5% Blue Governance token. So this would be like a fractional reserve model, basically similar to Frax. I think that's quite interesting because the Frax share model is proven to be successful, and they are following into a successful model. So I feel pretty confident that this will allow their blue tokens to have more value once they reach this level of scale and stability. So if we compare with Frax, they basically have the similar fractional reserve model, but the difference is that Frax only has the Frax, which is pegged to USD. They also have the FPI, which is a really interesting model, but it's still tied to the US dollars inflation rate. Whereas Bluejay will just focus on creating stablecoins for different Asian markets. And they also have stabilizing bonds to maintain the peg versus the minting and redeeming on Frax. and they also have a manual price stabilizer. So Bluejay has a dual token system with the Blue governance token and Blue stablecoins, and Blue will act as the value accruing governance token and Blue stable is the stablecoin. So the treasury will initially be backed by USD stablecoins such as DAI, but will eventually diversify to include the non-USD stablecoins to reduce volatility as different Blue stables are issued. So for example, if we have Blue SGD, they will start to accept XSGD potentially, and I think there is a strong partnership that they have with the Straits X, which is the issuer of XSGD. So as they build up partnerships with different on-ramp of stablecoin minters across the Asian markets, they can include all of these stablecoins into their treasury to reduce the volatility as they issue different Blue stables for the different Asian markets. So Blue will initially launch with 1 million Blue tokens with no maximum supply, and the reason why there's no maximum supply is because they need to allow Blue to be issued and stablecoins to be minted. So I don't think the maximum supply is an issue, because if Blue supply increases, it means that there's actually more demand, and that's good for the protocol's health. So Blue will also enable holders to vote on governance proposal, example project collaborations, new stablecoins, or reserve proportions, etc. So if we look at MakerDAO, the similarities is that they both have a dual token mechanism using Maker and DAI, and then it's Blue and Blue stablecoins. And there is a value accrual on the governance token as they accrue more revenue from their Blue stables being used. And the governance token can be recapitalized to issue stablecoins and back it as a last resort, although that's more for black swan scenarios and won't be expected to happen. But the differences is that Bluejay is a multi-stablecoin model with liquidity-backed stablecoins versus collaterals backed on DAI. So if you think about efficiency, Bluejay is a lot more capital efficient versus MakerDAO's over-collateralized model. And the value generated from utility is greater, in my opinion, than the renting system of MakerDAO, where you deposit your ETH and then you mint out DAI. And then there is also protocol managed positions versus user managed position on Maker. So all of the collateralization and the backing and all that will be managed by the protocol, whereas for MakerDAO, when you deposit ETH and you mint DAI, you need to watch the ETH price to make sure that your position or your collateralized debt position, CDP, doesn't get liquidated. So these are something that you have to worry about if you are using MakerDAO, but if you are using Blue stablecoins, then it's all managed by the protocol and you don't have to worry about that. So in my opinion, I think the Bluejay model is more scalable than MakerDAO, and it's easier for people to use, and there's more value accrual back to the Blue token. So I think in those aspects, I find that quite interesting as well. So looking at the Bluejay Finance funding, they raised $2.9 million in July from 7 venture investors, including like Ribbon Finance, Frax, Alpha Venture DAO, etc. So the team will be using these funds for development on Asian-based stablecoins such as SGD, Malaysia Ringgit, Philippines Peso, and will distribute the funds to partner protocols as liquidity. So now let's look at the tokenomics. So P-Blue represents the unminted Blue and is given to early investors, but this is not accessible to us because we are no longer in the early investment round. The 20 million P-Blue will be vested linearly as the total supply reaches 50 million Blue. So the fully vested P-Blue can be exchanged one-to-one for Blue token. And what's interesting is that although it sounds like there is inflation here, if you look at the tokenomics, the P-Blue tokens will only be fully vested as long as the Blue tokens actually increase in supply. And if Blue tokens increase in supply, that means that the protocol is actually doing well. So I think there's a pretty good incentive for the protocol to do well. And if the protocol do well, then early investors, they have done a good job investing in a good protocol. And the initial market cap of Blue will be between 5 to 10 million. So right now there is this early round where you can buy it at $5. If everybody buys at $5, because the initial supply is only at 1 million Blue tokens, then the market cap will be 5 million. But if we all wait until it goes into the public, then it will be listed at $10. So it will be between 5 to 10 million, which I think is a pretty okay market cap. And I think the upside potential is pretty decent from a valuation standpoint. So I do think stablecoins are one of the biggest market, and it's the easiest for normal people to understand. and trading and exchanging and using stablecoins to pay for goods and services on the blockchain is actually quite convenient, and I think it will increase in adoption over time. So I do see this as a pretty good way to bet on stablecoins getting bigger and bigger. So if you believe that stablecoins, especially in the Asia market, is not really fully tapped on, and you want to invest in an infrastructure or protocol that is looking to tap and expand the stablecoin usage in Asia, and you think that there will be strong adoption from Asians using Asia stablecoins, then I think Blue will be a good investment. So I personally think that the investment thesis makes sense. I think as Asia markets, they continue to digitalize and go online and eventually get exposed to blockchain, I think it's only a matter of time before they all start moving into their on-chain stablecoins, and I think Blue will benefit a lot for being one of the early movers. So moving on to staking Blue, users can stake Blue in exchange for SBLU, which stands for Staked Blue, to earn rewards and from bond sales and LP fees. So the staking rewards accrued and compounded every second to encourage long-term stakers. So this means that stakers do not have to spend gas claiming rewards or pay extra fees to compounding vaults. It will all be done automatically by the protocol itself. So they are really thinking of ways to maximize the value given to their token holders. These extra fees actually do play a part over a long period of time. If you look at Beefy vaults, Beefy actually charges like a 10% performance fee, and that really eats into your rewards over a long period of time. So they are actually making this free, so you don't have to lose that 10% performance fee. If you did a study on like S&P ETF, you'll know that the charges like between 0.9% and 0.3% makes a huge difference over like a 20-year time frame. So not saying that you want to be invested over 20 years, but if you take this as a long-term investment, it definitely matters what the performance fee is. And in this case, the auto-compounding vault or the auto-compounding is done for free for you, so you don't have to lose money over that. And elaborating further on the Staked Blue tokens, since the value of Staked Blue is auto-compounded, the Blue exchange rate increases in value every second. So this is really convenient. And there is also an initial inflation rate that will start at 50% APY, but it can be redetermined or basically changed by the DAO eventually when the DAO goes live. So I would see this as a bootstrapping mechanism to really incentivize people who are longer term investors to stake Blue and get this 50% APY. And although it might be creating inflation, but I think if Blue's business model were to succeed, then this 50% APY shouldn't affect it too much in the initial stages. And eventually, when it is deemed unnecessary, because there's already enough success, the investors are already very confident, and the amount of revenue generated to Blue stakers is already sufficient, and then they can actually do like another governance vote to change this down to a smaller amount. And if we look at protocols like Ohm, they initially started off with a much higher inflation as well, but it eventually reduced over time. So starting at 50% APY is a lot lesser, and I think it's more reasonable, and it's going to be more sustainable and will help the price better. So if you look at the type of protocol revenue, there is mainly arbitrage and swap fees. So arbitrage is when you make a profit when the price of the stablecoins in the different markets differ due to the supply changes, and the revenue is generated upon buying and selling to bring them to peg. So if, for example, if Blue SGD is actually a lot cheaper for some reason, and compared to the price of USD, then you can use USD to sell into Blue SGD to buy it and then basically arbitrage it. There's also swap fees where the treasury accrues value by owning the bulk of the liquidity in the stablecoin pools. So this goes to the protocol whenever users make a transaction on any of the Bluejay pools. So let's move on to the liquidity flywheel and how Bluejay will actually continue to grow in a rapid way. So how it starts is that users will contribute USD stables to the treasury and receive bonded Blue to kickstart the liquidity flywheel. And minting Blue stables will continue to add more liquidity, which will allow on-chain swaps and arbitrages that will generate fees that flow into Bluejay's treasury. So these fees that's inside the Bluejay treasury will be distributed to Blue stakers, and they will also increase the minting cap for stables, allowing Bluejay to expand into new markets. So Bluejay will also be able to manage liquidity across AMMs or currency pairs like BlueSGD DAI and control the peg of each stablecoin more tightly. So to elaborate on this, as the amount of money that enters Bluejay Treasury increases, so Bluejay Treasury now has a bigger amount of value. They can mint more stablecoins because they will increase the minting cap, and this will also allow Bluejay to expand to new markets. And here's also where the flywheel continues, where if they expand into new markets, they will be able to create more market, and this will create more on-chain swaps and arbitrage fees, which will again flow into Bluejay Treasury, and the flywheel will loop and continue. So this liquidity flywheel will be accompanied by real-world utility to expand the Bluejay economy. So what this means is that the team is actually planning to build bridges for DeFi capital into real world using local Blue stables, and other use cases include cross-border payments, helping to solve SME credit gaps. So we are familiar with GoFinch, which is the under-collateralized loan where they will take USDC on-chain and then help to off-ramp it into USD, and then swap it into the Forex or currency that they're going to lend out to SMEs. So essentially creating an SME credit market to the underserved. So this can be a big market and will also increase the revenue for the Blue Treasury. And they can also bring FX market on chain. So FX market is one of the biggest market. It's about 6.6 trillion worth. So that's for FX market. For the helping to solve SME credit gaps, the under collateralized loans market is about 8 trillion, if I recall correctly. So these are two huge markets that Bluejay can be a part of, and therefore I think their valuation of 5 to 10 million is quite decent in terms of the risk to potential reward if they become the go-to protocol to solve these problems. So they have a nice little graphic here where they have like structured FX products, medium small enterprise lending, cross-border payments, institutional lending, etc. So I think they are not only just doing stablecoins, but they can eventually move into credit markets like the under-collateralized loans market, which as we saw actually did do quite well, or at least have a big liquidity inflow this period. And I think the FX market is quite undercovered. So overall, it's a big market that they are looking to capture a part of, and I think it's going to be quite exciting. Moving on to their roadmap and future developments, if we look at infrastructure, they are building payment rails and liquidity to facilitate the on and off ramp for converting their on-chain stablecoins to fiat. So I think this is a big thing, and the team is established, and I think they will be able to build all these partnerships to create all this on and off ramp for stablecoins to fiat. And then they will also be creating more partnerships to enable their stablecoins in various use cases, from company payrolls to real-world asset lending via DeFi, etc. And they will also create additional products like swaps, spot margin, and derivative contracts to expand their suite of FX products. So imagine you can actually like leverage long a certain currency that you're bullish on, or leverage short certain currency that you are bearish on using the Bluejay's platform. So this will enable a lot more volume, which will enable a lot more revenue generated to Blue Treasury and to Blue stakers. And then one of the biggest would be as a platform. So we are familiar with Curve being where all the USD stablecoin liquidity flow to, but Bluejay could be where all the Asia stablecoin liquidity flows into, and other protocols can actually leverage and tap on that and integrate with their liquidity. And they already have plans to provide ecosystem grants and launchpad programs. So I think in the next couple of months or years, we will see a lot of integrations, and we will see Blue stables potentially being more popular. So moving on to how you can actually participate in the Blue token, there's actually a whitelist event right now that you can go to. I'll put a link in the description below and also show you the link right after this. So the token sale is from 3rd November to 17th November, and the price will be $5 DAI. So it's half price from the public, but only 1 million Blue tokens will be available. So it's not really a big valuation or big MCAP, because $5 DAI at 1 million Blue is only about 5 million. And I think it will be quickly taken up between this period. So I don't think it will reach the public. Yeah, because I do think that they will be able to get quite a bit of traction, hopefully. So I will personally be participating in this as well, because I think the risk reward, like I mentioned throughout the video, it's pretty okay. So the whitelist eligibility includes testnet users, POAPs holders, and Discord quiz winners. And I think if you just do their testnet stuff, you can get up to 1,000 Blue, which is about $5,000, and that should be quite enough for most people. So if you look at Bluejay Valuation, the current circulating supply on launch will be 1 million, and the market cap will be between 5 to 10 million. My bet is that it will be closer to 5 rather than 10 million. And unfortunately, there's no TVL right now, but they have 2.9 million in funding, so you can kind of use that as TVL, but not exactly, because their funding will be used to seed liquidity, and liquidity is in a way kind of like TVL in a sense. And if you look at the market cap of their stablecoin, so it will initially also be 5 to 10 million, similar to the Blue market cap. So if you look at Ohm, it's at 288 million market cap, and they want to be the reserve currency of DeFi, so it's a very different mission than Blue. But if we look at Maker, they are at $838 million market cap, and their TVL is 7.7 billion. So MCAP to TVL is 0.11, and their DAI is at 5.77 billion market cap. So Blue Stable will start off at just 0.1% of DAI, and I think there is probably room to climb. If we look at Frax, it's at 1.2 billion market cap, and their market cap of their governance token is at 400 million. So if we compare the market cap of the stablecoin to the market cap of the governance token, DAI to Maker is about 7 times, and Frax to Frax share is about 3 times. If you look at the market cap of Angle, it's at 5.6 million, but they have a very different model from Blue because they have a fixed supply, and there's another 5 times coming out. So the FDV is actually closer to about 25 to 30 million, whereas Blue doesn't have a fixed supply, so you can't use the fully diluted valuation model. And then if we look at their stablecoin, Angle Euro is at 42.8 million. So overall, I think Blue has a good potential and has a lot of room to climb. So let's move on to the Testnet Whitelist. Right now, if you go to the Testnet on Gorelli network, early testers of the protocol can get whitelisted to purchase Blue before it gets released into the public. So if we go to the Bluejay Finance website, and then you connect your wallet, they will show you the tasks that you need to do. So once you key in your ETH wallet address, you'll see the different things you need to do. So the testnet activities are pretty straightforward. You just need to read them and just do them on the testnet. And for the faucet, you can go over to their DAI faucet to get DAI, but first you need ETH, so you can go over to the Gorelli faucet. I'll put the link in the description below as well, and you can get some of the Gorelli ETH as gas. So once you're done, you can get up to 1000 Blue, but if that's not enough, you can take a look at their Partner Protocol Token Holder Program, where if you hold these tokens, then you can actually get more Blue whitelisted as well. So in conclusion, Bluejay Finance is a capital-efficient, decentralized stablecoin protocol made up of Olympus DAO, MakerDAO, Angle Protocol, and Frax Finance. So they are focused on being an Asian-based stablecoin issuer. They can create a lot of different opportunities for different Asian markets that currently do not have easy access to the US dollar. And there are many key developments on the roadmap that could solidify Bluejay as the top multi-currency stablecoin platform and onboard millions of users if they execute their roadmap well. And I do think that at the initial valuation of 5 to 10 million, there is a huge potential and market cap that can climb throughout the course of their roadmap. And I think on a personal note, I am pretty bullish on it, but ultimately do your own research and invest with caution. So hope you guys found this video useful, and do remember to like and subscribe, and I'll see you guys again soon. Bye!
Baby fish do 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 do, baby fish do 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 do, baby fish do 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 do.